Hey everyone, and welcome back to Talk Tickers.
Yes.
Today we're diving deep into SoFi's Q4 2024 earnings call. And let me tell you, they had themselves a year.
It certainly seems that way. SoFi is reporting some pretty impressive figures and setting some big goals for 2025.
Okay, so before we get into the weeds, give us the high-level overview of their 2024 performance. Yeah. What were the big headlines?
Well, 2024 was a banner year for SoFi.
Okay.
They hit record numbers in revenue, profit, new members. They're over 10 million strong now.
Wow.
Product adoption and returns. CEO Anthony Noto, he expressed immense pride in the team's achievements and has a very optimistic outlook for SoFi's future.
It sounds promising. But hitting GAAP profitability for the first time ever, that's got to be the biggest news, right?
Without a doubt, that's a huge milestone. You know, it really signifies their transition from a promising startup to a bona fide profitable company, a sign of their maturity and sustainability.
Okay, let's talk numbers. Walk us through some of the key figures from their Q4 and full year financials.
Okay, so in Q4, they reported an adjusted net revenue of $739 million,
Okay.
which is a 24% increase year over year. For the full year, they brought in $2.6 billion, up 26% year over year.
Right.
And we can't forget their profitability. They achieved a record-adjusted EBITDA of $198 million in Q4 and over $665 million for the full year.
And what about earnings per share?
Adjusted EPS came in at $0.05 for Q4 and 17 cents for the full year. This excludes any non-recurring benefits related to deferred taxes, but perhaps even more impressive is that streak of 5 consecutive profitable quarters.
Yeah.
That consistency speaks volumes about their growth.
Absolutely.
Yeah.
So what's fueling this impressive growth? What are the main factors contributing to SoFi's success?
Well, it's a combination of factors, you know, strong member growth, product diversification, a really strategic focus on financial services, and a surge in their fee-based revenue. Essentially, they're attracting new members, and those members are engaging with more of SoFi's offerings.
Let's dig deeper into each of these drivers. Starting with member growth. What kind of numbers are we looking at?
Their member base has grown to over 10 million, a 34% increase year over year. And just to put that in perspective, they've achieved tenfold growth in just 5 years.
Wow. And how are they ensuring these new members stick around and continue using their services? What's their strategy for product growth?
SoFi boasts an impressive 14.7 million products now, which represents a 32% year-over-year increase. And a significant portion of this growth, over 89%, comes from their financial services segment.
Got it.
This tells us they're diversifying away from traditional lending and moving towards capital-light, fee-based revenue streams.
You mentioned fee-based revenue, and I noticed that SoFi hit a record high in that area. Tell me more about that.
Yeah, their fee-based revenue reached a staggering $907 million, a 74% increase. This underscores the success of their capital-light strategy, which, as you know, focuses on generating income without taking on too much risk.
Now, SoFi talks a lot about their financial services productivity loop. What exactly is that, and why is it important?
Think of it as a flywheel effect. They have a knack for encouraging existing members to adopt more products, which in turn drives further growth and profitability. It's a self-sustaining cycle that's proving very effective for them.
Can you give us a concrete example of this loop in action?
Absolutely. Look at SoFi Money. Since 2020, they've scaled it from a modest 646,000 products to an incredible 5.1 million products. It's a perfect illustration of the productivity loop in action, and they're planning to replicate this success with their Invest platform, which is exciting news.
Okay, so they're growing their member base, expanding their product portfolio, and generating strong revenue. But what about their strategic initiatives? What are they doing to sustain this momentum, and what's on the horizon for SoFi?
They have a number of innovative strategies in play. Their loan platform business, or LPB, allows them to serve a wider range of borrowers without taking on additional risk or capital. It's a smart way to generate fee income.
Could you explain how the LPB works? It sounds a bit complex.
Sure, essentially, SoFi partners with large institutions like Fortress, originating loans that meet their specific criteria. They earn fees for this service, and the loans are held on the partner's balance sheet, not SoFi's. This minimizes SoFi's risk exposure. But here's the interesting part.
Okay.
SoFi retains the servicing rights for these loans, allowing them to maintain those valuable customer relationships and potentially cross-sell other products down the line.
That's a clever way to generate revenue and maintain customer relationships. What other strategic moves are they making?
They've revamped SoFi, plus their premium membership introduced a new subscription-based model with enhanced features. This is aimed at attracting an even broader user base and increasing customer loyalty.
That's interesting. Now let's talk about their technology platform. What's happening on that front?
Their technology platform is becoming a major revenue generator. They're providing financial technology solutions to various businesses, creating a steady stream of income, and they're winning some big contracts. For example, they were recently selected by the U.S. Department of Treasury for their Direct Express program. That's a huge vote of confidence.
It sounds like they're really making a name for themselves in the fintech space. So let's fast forward a bit. What's SoFi's roadmap for 2025 and beyond? What are their goals and ambitions?
They're aiming high, which is to be expected given their recent performance. They're projecting to add at least 2.8 million new members in 2025,
Okay.
representing a 28% year-over-year growth.
That's ambitious. Do they have any revenue projections?
They're projecting adjusted net revenue between $3.2 billion and $3.275 billion.
Wow. And what about their profit outlook?
Get ready for this. They're anticipating adjusted EBITDA between $845 million and $865 million. That's some serious profitability.
And their estimated adjusted GAAP net income.
They're expecting it to fall between $285 million and $305 million.
So it seems like SoFi's growth strategy is paying off. They're attracting new members, diversifying their revenue streams, and investing heavily in innovation, all while keeping an eye on profitability. It's a compelling combination. Anything else you want to highlight about SoFi's 2025 game plan?
Yes, one crucial point. SoFi isn't just hoarding profits. They plan to reinvest a significant portion back into the business, targeting an incremental EBITDA margin of around 30%.
Interesting.
This reinvestment strategy really demonstrates their commitment to long-term growth and innovation. They're playing the long game, and so far it seems to be working. What's truly remarkable is their confidence in exceeding their medium-term revenue growth guidance of 20% to 25% compounded annual growth through 2026. They're not just meeting expectations, they're aiming to surpass them.
Okay, SoFi is clearly a company to watch in the fintech space. Now let's have some fun with our This Is Not Financial Advice segment. What's your outrageous but plausible trade idea based on SoFi's projected growth, their diversification strategy, and the overall market conditions?
This is where things get interesting. SoFi is aggressively growing its deposit base and strategically venturing into alternative assets. Couple that with the current regulatory uncertainty around crypto, and it paints a very intriguing picture. Could SoFi be quietly positioning themselves for a major move into the crypto space, waiting for the regulatory landscape to become clearer?
Okay, I see where you're going with this.
Imagine this. They're amassing a war chest of deposits, diversifying their portfolio, and patiently observing the crypto market evolve. If and when regulations become more favorable, they'd be in a prime position to pounce, leveraging their existing infrastructure and brand recognition to make a significant impact on the crypto market.
I'm going to pause here for now, but stay tuned because when Talk Tickers returns, we'll be taking a closer look at SoFi's credit performance and diving into their different lending segments.
So SoFi's strategic positioning in the crypto space is certainly intriguing, but let's bring it back to their current performance. One of the key indicators of any financial institution's health is credit performance, especially in lending.
Absolutely. How are SoFi's borrowers holding up? Are they weathering the economic storms out there?
Well, it seems like SoFi is attracting a resilient bunch. Their average personal loan borrower boasts an income of $158,000.
Wow.
And a weighted average FICO score of 744. That paints a pretty solid picture.
Those are impressive numbers. What about their student loan borrowers? Are they seeing similar strength in that segment?
Equally impressive. Their student loan borrowers have an average income of $134,000 and a weighted average FICO score of 765. These figures suggest that SoFi is successfully targeting a high-quality borrower base, which is a good sign for their credit risk management.
That's reassuring to hear. Now let's talk about delinquencies and charge-off rates. Those are always key metrics for lenders. What's the latest on that front?
The good news is that delinquencies peaked back in the first quarter of 2024 and have been trending downwards ever since. Specifically for personal loans, the 90-day delinquency rate was just 55 basis points in Q4, slightly down from the previous quarter.
So things are moving in the right direction. What about charge-offs? Are those also showing improvement?
Yes. The annualized charge-off rate for personal loans also decreased to 3.37%, down from 3.52% in the previous quarter. And when you consider recoveries and exclude those late-stage delinquencies, they sold off. The all-in annualized net charge-off rate would be around 4.9%, down from 5% in Q3.
Okay, so it sounds like their credit performance is holding up well. What about their lending portfolio overall? Any insights into their performance in personal, student, and home loans?
Their personal loan portfolio is shining with record originations of $5.3 billion in Q4. And remember, a good portion of these loans were originated through their LPB program, which we discussed earlier. This approach helps them diversify revenue and mitigate risk.
Right, that makes sense. And what about student loans? How did they perform this quarter?
Student loans also had a stellar quarter, with originations reaching $1.3 billion, a 71% surge year over year. It seems like student lending is bouncing back after a period of uncertainty.
That's quite a rebound. Do you have any thoughts on what's driving this resurgence?
It's likely a combination of factors. With interest rates stabilizing and the economy showing signs of improvement, borrowers might be feeling more confident about taking on student loans. And of course, SoFi's strong reputation as a lender in the education finance space certainly plays a role.
Makes sense. It's good to see them capitalizing on that. Now, how about home loans? Are they gaining traction in that market?
Home loans are steadily growing, although they're starting from a smaller base. Originations reached $577 million in Q4, an impressive 87% jump year over year.
That's a significant increase. What do you think is fueling this growth in their home loan segment?
Well, their digital-first approach to mortgages seems to be resonating with borrowers who appreciate a more streamlined and transparent process. Plus, their focus on offering competitive rates and flexible terms is attractive to those looking for alternatives to traditional mortgage lenders. And as their brand awareness grows, they're naturally able to tap into a larger pool of potential homebuyers.
So it sounds like all three lending segments, personal, student, and home loans, are demonstrating solid growth. Now let's shift gears and talk about SoFi's funding strategy. They've been really emphasizing deposit growth, and it seems to be paying off. What impact is this having on their business, particularly in terms of their net interest margin?
Their focus on growing deposits has been a brilliant move. It not only strengthens their balance sheet, but also helps reduce their funding costs significantly. They're getting close to their long-term funding target of 85% to 90% deposits, which translates into substantial savings on interest expenses.
Well, so they're essentially becoming less reliant on more expensive funding sources.
Exactly. And the shift is reflected in their net interest margin, or NIM. It's been consistently strong, hovering above 5%. In Q4, it even edged up to 5.91%, a 34 basis point increase sequentially.
That's impressive. What's contributing to this positive trend in their NII?
It's mainly due to their success in maintaining asset yields while simultaneously lowering their cost of funds, thanks to those deposits we were just talking about.
Okay, so their deposit strategy is working wonders for them, bolstering their DICI and profitability. What about their capital position? Are they well capitalized to support their ambitious growth plans?
They're in a very good position capital-wise. Their total capital ratio was a healthy 16.2% at year-end, comfortably above the regulatory minimum of 10.5%. They've also been diligently building up their tangible book value, which reached $4.9 billion, including those non-recurring benefits related to deferred taxes.
So their balance sheet is strong, their funding strategy is effective, and their credit performance is solid. That's quite a trifecta. Now let's talk about their future plans. You mentioned earlier that they're shifting their focus toward reinvestment for growth. Can you elaborate on that?
They're not content with just maintaining profitability. They're aiming for aggressive market share expansion. To achieve this, they're pouring a significant portion of their profits back into the business, particularly into their high-growth financial services segment.
And what's the reasoning behind this reinvestment strategy?
It's all about maximizing their long-term growth potential. They see a vast landscape of untapped opportunities in various financial services sectors, and they're willing to sacrifice some short-term profit to capitalize on these opportunities. It's a bold move that speaks volumes about their confidence and their long-term vision.
So they're playing the long game, betting on future growth over immediate returns. It's an interesting approach. This reinvestment strategy, combined with their strong financial performance and ambitious growth targets, certainly makes SoFi a compelling story in the fintech space. They're clearly not afraid to shake things up and challenge traditional financial institutions.
Absolutely. They're playing a different game altogether. They're not just another lender. They're building a comprehensive financial ecosystem designed to empower their members and help them achieve their financial goals.
It sounds like they're trying to become a one-stop shop for all things finance. SoFi's Q4 2024 earnings call definitely revealed a company that's performing at a high level. Their strong financials, robust credit profile, and forward-thinking growth strategy make them a force to be reckoned with in the fintech arena. Now let's dive into their technology platform and see how it's contributing to their overall success.
Their technology platform isn't just a supporting player, it's a key revenue driver and a strategic asset that truly sets them apart.
Okay, I'm intrigued. Tell us more about how their tech platform is shaping up and how it's generating those attractive fees.
Okay, I'm intrigued. Tell us more about how their tech platform is shaping up and how it's generating those attractive fees.
Think of their technology platform as a versatile engine that powers not only their own operations, but also those of other financial institutions and businesses.
So are they essentially becoming a fintech as a service provider?
Yep.
Exactly. They're leveraging their technological expertise to offer a range of solutions, from core banking infrastructure to digital lending platforms to other companies looking to enhance their financial service offering.
That's a smart move.
Yeah.
It allows them to monetize their technology investments while also expanding their reach and influence within the financial ecosystem. It's a win-win.
Precisely. And this strategy is yielding tangible results. In Q4, their tech platform revenue grew 6% year over year, reaching $103 million with a healthy contribution margin of 31%.
Those are solid numbers. What's driving this growth? Are they landing major clients and expanding into new markets?
They're definitely making waves. Remember that significant contract they secured with the U.S. Department of Treasury for the Direct Express program? That was a major win, validating their technological capabilities and boosting their credibility in the government sector.
That was a big deal. Any other notable client wins or partnerships that showcase the potential of their tech platform?
They recently signed a deal with a large U.S.-based financial services provider that offers a wide range of products, including short-term consumer loans, card services, and check cashing. This company has a massive loyal customer base and a substantial debit card portfolio, which they'll be migrating to SoFi's platform.
Wow, that's a huge win.
Right.
What kind of impact will this deal have on SoFi's tech platform revenue?
This new client is projected to become one of their top 10 revenue generators once they fully transition to SoFi's platform in early 2026. So we're talking about a substantial and predictable revenue stream that will significantly bolster their financial performance.
That's fantastic news. What about global expansion? Are they looking beyond U.S. borders to expand their tech platform's reach?
They're definitely thinking globally. They've recently secured deals with several large enterprises in Latin America, signaling their ambition to tap into new markets and geographically diversify their client base.
So their tech platform is firing on all cylinders, driving revenue growth, attracting major clients, and expanding globally. It's a powerful growth engine that complements their core financial services offerings perfectly.
Absolutely. It's a strategic asset that differentiates them from traditional financial institutions and positions them as a front-runner in the next generation of fintech innovators.
It seems like SoFi has cracked the code for success in this evolving financial landscape. Their diversified business model, tech-driven approach, and unwavering focus on delivering value to their members are the key ingredients in their recipe for success.
And let's not forget their relentless commitment to innovation. They're constantly pushing boundaries, exploring new technologies, and seeking out new ways to enhance their products and services.
SoFi's Q4 2024 earnings call painted a very positive picture. They exceeded expectations on almost every front, and their future prospects appear incredibly bright.
They've proven their ability to navigate challenging economic conditions, adapt to changing market dynamics, and emerge stronger. They're a company on a mission, and their journey is far from over.
We've covered a lot of ground today, from their impressive financials and credit metrics to their innovative growth strategies and ambitious plans for the future. Now, as we wrap up this deep dive into SoFi's Q4 2024 earnings call, what are some key takeaways for our listeners?
SoFi is really a leading indicator for the future of financial services. Their success shows that a tech-driven, customer-centric approach can disrupt traditional models and change the way people manage their money.
It seems they've proven that innovation and profitability can go hand in hand.
Exactly. They're not just chasing growth at all costs. They're building a sustainable business for the long haul.
This has been such an insightful look at SoFi's Q4 2024 earnings call. Any final thoughts or key takeaways for our listeners before we sign off?
SoFi's story is truly inspiring. It highlights the power of innovation resilience and a relentless focus on customer needs. They're a company to watch not just for their financial performance, but for their potential to redefine the boundaries of the financial services industry.
I couldn't agree more. SoFi is definitely a company to keep on your radar. And with that, we wrap up another deep dive here on Talk Tickers. Thanks for joining us, and we'll catch you next time for more deep dives into the world of earnings calls.